I just read recently that credit card debt is the highest it's ever been in the United States right now. Credit cards at 24% interest rate. If a client is in a home and they have equity and they've been in that home and they're locked into a lower interest rate, that's great. That's where they should be. If they have an exorbitant amount of debt in that 20% range and it's eating them alive and they have all this equity in their home, there is a position to talk to a trusted advisor like us. We have these conversations all the time. Oftentimes they end, let's find another option and not get out of that great low interest rate you have. But in some cases, when you're just getting by, you're drowning in credit card debt, you have all this equity in your home, in some cases it makes sense. Let's look at your cash flow. Let's look at those 3 credit cards. Let's look at that home equity line of credit, which keeps going up. Let's look at this other consumer debt you have, and you have $100,000 equity in your house, and you have this $50,000 of revolving debt that's eating you alive, and you're just trying to make ends meet. It doesn't make sense. So what we do is a cash flow analysis. Yes, your mortgage payment is going to go up. Yes, you're going to be getting out of that super low interest rate, but we're able to make that debt go away. One of the things I advise with clients is, I'm going to help you with this, and I don't feel great about it. Here's the deal. I want you to commit that we're going to rip up that credit card debt. We're not going to get ourselves in that spot again. We're going to cut up all those credit cards. You're going to keep one credit card for you, one for your spouse. Every single month at the end, you're paying these things in full. And let's get you out of debt. Let's start building up the savings. In the same token I talked about earlier with refinancing, when you buy a home, you can still refinance later. If you refinance now to a cash out refinance to pay some debt off, it doesn't mean you're stuck with that interest rate forever.
So you can do it. So you can refinance more than once.
You can refinance, pay off that debt. Let's wait again, 6 months, 12 months, 18 months, 24 months, whenever it is, if and likely when interest rates drop, you could refinance that mortgage that you took to cash out right now to get yourself in a much better cash flow position. We do that with clients all the time. But I'm going to give straight advice. I've been doing this long enough. I'm not looking for one more sale. I'm not looking for ripping a commission check. I want to take great care of clients, give them good advice, and it's to them. It's what fits for them. It's not a one size fits all. So for some people, yes, it does make sense to look at refinancing.
Awesome. Thanks for your time today, Kevin.
Thanks a lot, man.